is Abdallah Jouaid, the finance reporter at CNN Business Arabic. First of all, I would like to thank the DIFC and the Dubai Fintech Summit team for inviting me for the second consecutive year to participate here. I'm truly honored to have the chance to participate and to share my perspectives about the progress of the fintech in the region. Also, I would like to say that it's an honor to be joined by His Excellency, Mr. Edward Scicluna, the Governor of the Central Bank of Malta.
Thank you.
Welcome to Dubai.
Well, thank you.
It is a global hub for finance. Several factors now in Dubai has been leading to this, especially the adoption of the AI, the adoption of the tokenization, the adoption of a very well-developed regulation. I just want to hear your opinion about that, about Dubai being a global hub for finance.
First of all, I would like to thank the host here, the Dubai authorities, for the kind invitation. I'm very proud and happy to be here. I know it's a center where it's an exceptional country in the sense of being so keen to always get the best at any point in time, whether in planning, building, but in this case, it's finance. So I'm quite honored to be here in this environment and with a distinguished audience as well.
Mr. Professor, basically, we're going to talk about the CBDCs, which is the central bank's digital currencies. In your opinion, what role should central banks play in overseeing the use and the circulation of the CBDCs?
Well, CBDC is their baby, so they're going to give birth to it, hopefully, within maybe 3 years or 4 years' time. They have to give it milk, wean it, grow, see it grow, having its potential, and mature. And then, this is so, they are responsible for that. They will be responsible for the core platform, and then, giving an alternative, an option to the people of what they have done over the many, many years with cash. In other words, money, which is to be trusted, except when inflation starts gnawing at it, but otherwise it's stable, safe, and again, as I said, it's a question of, and also a unit of account with which all the trades and commerce and transactions can relate to. It's very important. In fact, we call it a public good. No private sector can do that. Otherwise, there will be so many, there were in the history times when there were so many exchanges that were chaotic. Because the mandate of central banks is monetary and financial stability. That's what the people require, expect from central bank. Now, in this digitalized world, where's the central bank? And come forward and show us what, continue with the unit of account in this new environment. Give us a means of transaction as an option, while not interfering with the development going on around the world, which definitely, this is the reason for this conference here, the summit here. We're hearing, it is so much more to be doing. But somewhere, something you trust, which is the government, the authority, the central bank, must be present, show its presence, and provide, the core and the liquidity, because without liquidity, no business can take place, and then stability with it. And the only authority which can guarantee that from its past track record is a central bank, whether it's the Fed, the Bank of England, or the ECB.
According to what you said here, maybe the traditional banking sector, especially the commercial banks now, maybe they are seeing this as a threat for them. So do you think adoption of the CBDCs will be like a competition with these commercial banks, or new opportunities to these commercial banks?
Let's put it this way. we cannot guarantee anything in this world today. I mean, cryptocurrency, the question that the blockchain can do away with intermediaries and so on. But as far as the CBDC is concerned, at least from the European side, what we call the digital euro, the plan is that the banks and other institutions and other entities can all participate. And it's not the intention to take away their deposits and put them with the central bank. So the plan is for accounts to continue existing, and what we will have, we can call it a wallet, but let's call it a wallet in the sense that money would flow through it, capped at a reasonable sum of perhaps 3,000 euros, and it will flow, and so it will not compete. It will not pay interest. You know, it will not cost money, but on the other hand, it will not earn interest, just like cash. So the banks, the commercial banks, will have the advantage to offer interest, so it will not try to compete with them. They have to participate, and in this way of the citizens having a means of payment, even if they are offline, and there will be software whereby person to person can transact without Wi-Fi or being online.
This is what matters. My question here also is, you know that we are going towards that digitization, the world where everything is digital, but to accomplish this, I think we need a very well-developed infrastructure to go there. So are we going to see like a partnership between the private and public sector, or the central banks will have their own platforms, their own tech platforms?
No, I don't want to trivialize it, but I think the technology is there. A lot of pilot projects have been carried out around the world with retail CBDCs, wholesale CBDCs, and cross-border ones. And, it's a question of finding one which has to tick the boxes in terms of desirability. Would the consumer, the mandatory, want it? It's not because the technology exists, therefore you lump it. I mean, there must be a demand for that. This is what is desired by the consumer, and have protection there as well. And at the same time, it has to be feasible, and that's where at the moment a lot of experimentation and trials, simulated and real, are being carried out successfully, I must say. They are feasible. And the other one is viability. In other words, would it last in the sense of, with the challenges we have around, is it resilient enough to withstand scalability and so on? Because even some cryptocurrencies have got problems of scalability when there could be congestion and so on. But let's not go into that direction. So the technologies, the challenges, and not just for crypto, but also for CBDC, would be question of the legality. And for example, in the European context, we expect the Commission has already put in the proposal, the legislative proposal, because after all, it's the governments which guarantee, central banks are there, but it's the government. And so it's the legal and the governance issues. They are more challenging. And then the cooperation. In other words, how going to link with other countries or the same platform, or, there are so many, whether you go on DLTs or not, and so on. So there are many questions and trade-offs. So that's why it's taking time. I mean, the digital euro is in its third year of studying. Now it's finished up the investigative stage. We are planning another 2 years of trial and error and seeing, so that you would be convinced. I mean, this is not a private sector, a startup and say, oh, oops, we got it wrong. I mean, you get the ECB, you cannot afford to get it wrong. So it will take time in a very prudent manner. And once you see that it's resilient and viable, then you go ahead. But we're not talking about, like AI. In the future, there will be all the possibilities have been technologically tried and tested by many central banks around the world. I can say that 9 out of 10 central banks, this is the BIS statistics, are monitoring, interesting, studying, or trying out research and so on. So within 3 to 6 years, we would be seeing them, implemented.
Your answer here leads me to a question regarding the less developed countries, the less democratic countries also. How do you think these countries will have the ability to adopt such technologies? They have like economic crisis, they have a lack of governance, and they have a lot of problems. So who will help them to reach out this stage?
No, this is not a magic lamp, where you solve all the world's problems. So it would be a good idea if we could do that. So, as I said, the governance issues and, it's as neutral as much as possible. And then each country will choose the way it wants to go without interfering in what kind of government the country has or does not have. So, central banks around the world, are getting together. They are observing each other. We learn from each other, because that's another sort of bottleneck. Everybody stays until to see what the trend is going to be. You don't want to spend so much money investing, and then you'll find, it's not going to be accepted. I won't be able to link. So this is what's slowing progress. I think in fintech in general, waiting for the regulator to say, whether he would accept it or not, and so on. So with CBDC, because it's the regulators now who are going to implement something, they still have to look over their shoulders and see what the trend is going to be, what sort of systems. And that's where the Bank of International Settlements, with its innovation hub, comes in. They are quite open, transparent. They talk about results, who has done what results they have achieved, and hopefully there will be progress and cooperation, not only between central banks of different countries, but central banks and the private sector. The central bank has to be transparent so that the private sector would come in. I mean, you don't expect central banks to get into what all these companies here present can do. There's no way. So it's very important to encourage innovation and progress and let the private sector in. In fact, all these pilot projects I'm referring to have the participation of both central banks and the private sector, not just from one country, but say a group of countries. I must add that there's more interest from emerging economies than the advanced economies, not because we haven't heard about the Fed going to CBDC. So it's just because advanced countries have so many payment systems and they are so rich, market and so on, while the emerging have the problem of keeping up, the question of inclusivity, to make sure that where before in the markets everybody had cash, what are they going to do? How they have built the system, like in India and in Brazil, have shown us that with a lot of thought, you could come up with simple, cheap, not too expensive systems to make sure that all the people, without exception, can use it.
But don't you think that the gap between the developed countries and the countries who have the ability to implement these technologies and others who has not will make the process maybe hard to reach?
This is not about CBDC. I think it's about fintech in general. In other words, we always believed, I still remember the first day of the internet, where we had universities communicating each other and there were no pictures, just Fortran or whatever it was. And today, and we always thought it was going to be democratic, and it is. We are much better off with the internet than without it, social media and so on. Even in countries which you say they don't have are considered as democratic, they're much better off. They can at least communicate and so on. But at the same time, we know that the internet gave birth to these enormous global companies who have this data about our lives, you know, they have it, and they have kept competition out and so on. And this is not what we intend to do. Hopefully will this open source or openness and transparency will try to avoid, but we cannot say where that would take us. But we've learned the lesson that with all the good intentions, we've created these mammoth companies who own data, because that's also a question of confidentiality. Who own our data? How many steps we do every day? How many floors have we gone up? You know, what our emotions were, which you think is good for the app, but somebody else is collecting that data. What it will do with it is a different matter. But so there's not much, you know, fairness about it.
Yes, this leads to the cybersecurity threats also. Before going to the cryptocurrency adoption that you already mentioned, the going towards the world which is digital world, I think the cybersecurity is very important to take into consideration. Yeah. Already governments are spending a lot to fight the cybersecurity attacks. So how the central banks also are planning to fight such problems?
Yeah, independent of CBDCs, you know, we're the supervisory authority. In fact, we are working at the moment, the ECB, the ESRB, which is the Systemic Risk Board, and the European Supervisory Authority, and the national authorities. Together, they are, at the moment, doing a pan-European cyber incident monitoring and, you know, system. Yeah. And because the first thing is to observe and exchange information and help each other at the point. So this is independent of CBDC. But the CBDC, you must ensure that the system is resilient and not open to attack. And we're learning a lot. So, I mean, credit cards have existed. You still find fraud here and there, but there are always ways how to prevent as much as possible and to mitigate once they happen, and there's no exception. So we are very aware of cyber attacks and the impact they have, tremendous. You know, it's really, if you were to experience it, it's really very fearful, and it's like being in a film, you kind of, or an earthquake or something like that. It's terrible.
Before wrapping up the session, my question here is about the adoption of cryptocurrencies and the growing adoption of the cryptocurrencies. Do you think that the central banks are going to adopt the CBDCs just to fight or just to face the cryptocurrencies adoption and fast growing? And also at the same time, do you think that in the future, are we going to see some partnership between the central banks and the crypto leaders, maybe anything between them? Although someone are centralized and others are decentralized?
The underlying technology, which is DLT, you know, is there for anybody to use, whether for CBDC, for crypto, for stable coins, and so on. No, I think CBDC will not supplement, but will complement. In other words, they provide the unit of account, as I said, yes, and the option, and for merchants and consumers alike, who always know that there exists an option to go for. We'll see what the outcome would be. But for crypto, at the moment, they have challenges as well. I mean, I wouldn't say, you know, they had governance challenges in the beginning. They looked into them. Now we have other challenges in question of congestion and size and so on, and how they integrate with the real economy. I think that there will be time when they will find solutions to it. So one cannot just suppress innovation and progress. So let's see what they come up with. They're quite innovative, and there's a lot of competition there. But definitely they will be challenging for a central bank. In other words, you know, The world will change, and the central banks of this world have to change, use the technology, we call it direct tech, and to make sure to carry on guaranteeing monetary and financial stability.
Mr. Governor, it's always a pleasure. Ladies and gentlemen, please put your hand together for Mr. Governor Edward Scicluna. See you next year. Thank you so much.